Hey everybody, making a quick video because I was having some thoughts that I wanted to share. I think this video might be helpful, and I have to talk a little bit softly. It's still a little bit early where I am right now, but I didn't want to wait. I wanted to just do this now. And I didn't complete what I'm making here. I thought I would build it, basically show you guys part of what my practice is. So what I'm working on, I'm looking at yesterday's chart again. This is the 5-minute. This is actually the E-mini. I know it says the SPY, but this is the 5-minute E-mini chart. We had a bull trend on the open, trend line break, lower high, and then a major trend reversal. And I mentioned in my past 2 videos that I'm working on a breakout system, and my signal is a 3-bar micro channel. And I wanted to talk a little bit more about that and how that relates to this, because I talked recently about how markets are fractal, and it's almost the same. You see the same patterns over and over again. They just manifest a little bit differently, but the logic is always the same. So I wanted to break that down further, what I mean by that. So here's the 5-minute chart, and I also took a screenshot of the 10-minute chart. Let me confirm that. That might be the 15, I forget. No, that is the 10-minute. Okay. So I just wanted to demonstrate it's the same pattern. Bull trend, trend line break, retest of the bull trend's extreme, lower high, major trend reversal. And then I have it here on the 30-minute chart. And the reason I have the 30-minute chart, I want to talk about this one, is because I have a signal. This is a 3-bar bull micro channel, and that's a signal. And what's significant about that? Well, there's a couple things. One is that that's a breakout signal. This breakout's strong enough that it's probably going to get a second leg. You can argue it's a late leg, so maybe it's not the greatest signal. You could argue it's 3 legs up, and that's true. But with that aside, I shared my probabilities from my studies in yesterday's review, and that is, in any context, regardless of leg count, you get a 3-bar bull micro channel, you buy the close up here, you have a 79% chance of having a chance to exit the trade at break even at the high close before your stop is run. So you buy this close, scale it lower, you can avoid a loss. And then I was working on this slide, and these lines over here are literally just copy and pasted over the swing points right here. And what I'm trying to demonstrate is how pullback depth plays a role in market behavior. Because a trendline break is a breakout, and it's disappointing. So you can add to the fact that, yeah, this is good for the bears because this is a late leg, but even if we didn't know the leg count, let's just say we have no idea what the leg count is, and it's just a strong breakout, so we're not over analyzing anything. 3-bar micro channel, second leg likely, so you buy the close, stop below, and this rally is 30.75 points tall, but the pullback is 20 points tall. I haven't done the math yet on that pullback. All I know is that it's very deep. %65 pullback. If you've watched the Brooks trading course, you've heard Al talk about if a trend pulls back 2/3, 2/3 of the range of the leg, there's a the probability that you get trend resumption is significantly less. Now, I haven't done the stats on that. I haven't done the study, but I do know that if I bought the close and not to sit through a 20-point drawdown, I'm going to be disappointed. 65% is a deep pullback. Think about it. If I thought the market was going to pull back 65%, I never would have bought this close. I would have bought a pullback, maybe 50%, maybe 60%, maybe the breakout point here. Whatever it is, I obviously would not just buy the close if I thought we'd get the deep pullback. So the deep pullback is disappointing. So what are traders going to do on a retest of this trends extreme? And we don't know if it's going to retest the high close, the stop order. In this case, we did test the stop order where traders got trapped above this third bull bar. You can see the reaction. So it's a bull trend, a deep trend line break, 65% pullback, a brief retest. The bulls got their minimum second leg. This one was only 2 bars, the bull reversal bar and the bear bar, but we retested the highs. Then we got a reversal bar setting up a major trend reversal. This all unfolded over just 5 or 6 bars on the 30-minute chart. Again, this is the 30-minute. And again, here's the 10-minute chart. So just to visualize that again, we have a bull trend. We got a trend line break, endless pullback. That's disappointing to the traders up here. And when I say disappointed, when you hear Al talk about disappointment, when you hear me say disappointment, you hear Brad talk about disappointed traders, we're talking about trapped traders. And, I'll get into that really quickly, really briefly. What are trapped traders? Who are trapped traders? There's 2 main categories. There's really 3 categories for trapped traders. And this is the dynamic that is responsible for creating second legs. So what happens? Well, it happens both ways. So first, in this rally, we have trapped traders below. You have a bear who sold on a stop order below this reversal bar. They got trapped on the bull bar. Make this a little bigger. Bears sell on a stop order. They get trapped out, or they get trapped into a losing trade. Bulls, maybe they exit longs below this bar. They're trapped out of a winning trade. That dynamic is responsible for the second leg up, because bears who are trapped into a losing position are going to look to scale in higher and try to exit on any bounce, any shallow pullback, so that they can avoid a loss or exit with a smaller loss. Then you have bulls who are trapped out. They missed the rally. They're also looking to buy a pullback so that they can, let me put it this way. You have bulls who did not buy because they did not. Let me back up. I just want to make sure I'm wording this clearly. So the first group of trapped traders are the bears. And there's no particular order. I'm just organizing my thoughts. You have bears who sold below the bear bar. They sold for any reason. They're short for any reason. Maybe it's 1, 2, 3 legs up. Reversal bar, they sell here, they sell above this bar. Wherever you sold, you're trapped on this breakout and follow through, and more follow through. So bears are trapped into a losing position. They're desperate to get out of their positions with a smaller loss or at break even on any pullback. Then you have the second group of trapped traders, and these are bulls who doubted the bull breakout, so they did not participate. So the bulls, they see the reversal bar, but they think maybe it's a late leg, it's an outside bar, maybe it's an expanding triangle, I don't want to buy high, and then they get trapped out of the rally. So you have now bulls who did not participate in the breakout, and they are looking to buy a pullback. And then the third group of trapped traders, they're not so trapped, because you have bulls who did buy. You have bulls who bought below this bar, bought above this bar, bought for any reason. But at the time, before the breakout, the probability was maybe average at best. And then they got the breakout, and they were now wishing, darn, I wish I traded bigger. So the traders who did buy are also looking to add on to their already winning position so that they can bring their position size up to the full amount of risk that they can handle with their account. So you have bears trapped into a losing position. You have traders, bulls who missed the rally, they're trapped out. You have bulls who did buy, but they bought small. They want to add on. And this demand from the trapped traders is the dynamic that leads to a second leg. We get a breakout, trapped traders below, shallow pullback, traders buy it. We get a second leg, happens again, we get a third leg. So in the big picture, it's the same idea. This trendline break is leg one for the bears. And it's trapped traders up here. You have a tight bull channel, buy for any reason. And there's reasons to reduce your position or not buy here, but I don't want to get into that. I want to just talk in theory. You have a tight bull channel, you're buying for any reason, you're using a wide stop down here, the bottom of the bull trend, and then you get this pullback. And if you bought up here, it doesn't matter if you bought the low tick down here or if you bought the high tick. If you bought anywhere and you held long through this pullback, you're disappointed. There's no difference between buying the low tick, riding this all the way up, and then sitting through this pullback versus just buying the high tick and sitting through the pullback. It's the same trade. So it doesn't matter where you bought. If you held long through here, you're disappointed. This is a deep pullback. So what are you going to do on a retest? Well, if you're a bull, you're in the holding a losing position camp. You're that group of trapped traders. You're long, you're holding a long position. You suffer this deep drawdown. You're disappointed. You're hoping for any bounce to exit at break even or with a smaller loss. You have bears who didn't take the sell. Fairly weak reversal bar. Again, it's a tight bull channel, low probability sell. So bears who doubted the breakout, they did not sell. They're trapped out of a winning position. Then you have the bears. This is the third group. You have the bears who did sell. They sold with a stop, maybe here or anywhere as it's going up. Not yet high probability, so they're not trading very big. But then they get this decent move. And they know this pullback is enough to disappoint the bulls. There's probably sellers at a new high or somewhere above. And they wish they traded bigger. So when there's a pullback, those bears are going to add on to their positions. They're going to press their bets. So what happens? Everybody's trapped up here. Disappointed bears, disappointed bulls. So when we retest this price, everybody sells, and that's what leads to the major reversal. So once again, this is, for me personally, my signal, 3-bar micro channel, buy the close, scale and lower, disappointed with the depth of the pullback, the fact that it's 65%, probably just look to exit at my original entry price, which would be the close of the 3rd bar here. So that's going to be it for this video, and I hope that was helpful. Please leave a comment if I'm making any sense, if that's helpful. I'd really appreciate the feedback. Or with any questions, please let me know. All right, thanks everybody, and I hope everyone has a good weekend.